coming at a $593 million valuation, going for $8.56. Is Beyond Meat stock a buy right now? Okay, so it's actually super volatile right now. The past couple hours, it's down 14%. The reason for this jump right now is because of the meme stock rally. Twitter's going crazy with the meme stocks. Looks like the legendary Roaring Kitty is back. He's been posting a bunch of memes on his page. I don't know, some like subliminal messages. Yeah, it's causing a lot of the meme stocks to come back up. Everything's been pretty active on Twitter right now. Everyone's been active on the meme stocks. Anyways, let's look at the boring stuff and go into the financials. This is quarterly data. I always like to start with quarterly data so we could see what the most recent numbers are. Right off the bat, top line, total revenue have been going down for the past 7 quarters consecutively. Super bad sign. And when you take a look at earnings per share, same thing, past 6 quarters have been going down consecutively. When we take a look at the December quarter of 2023, down 128% earnings per share. This is just not a good sign. Quarter 1 of 2024, they posted 75.6 million versus 92.2 million back in March of 2023. That is an 18% decline year over year. So not looking good from the top line itself. And we'll skip down net income real quick. They've had a decline pretty much for the past year. Net income in December of 2023, net losses have more than doubled comparing it to a year ago. That is not looking good. A net income loss of 155 million versus a net income loss of negative 66 in December of 22. That is a 131% decrease in their net income year over year. So as you can see, Beyond Meat is struggling a bit. Not a bit, maybe a lot. The only positive points that I have highlighted in the quarterly data right now is going to be their cash flow from operations. A little bit of an improvement. They haven't really achieved positive cash flows for the past couple of quarters, except in September of 2023. And they are slowly improving their cash flow from operations. As you can see from the past 7 quarters, they've been improving it year over year. That's pretty much the only improvement that they've been experiencing. Again, total revenue, earnings per share, net income, all negative. It doesn't look like they have any growth coming in right now. So the decline in sales that they've been having in the past couple years reflects not only the general decline, but pretty much the unpopularity of the products itself. They've also been losing market share and the inability to gain much traction with some of the partnerships that they've been dealing with. When we take a look at the latest transcript, this is quarter 1 of 2024. They did miss earnings per share estimates and they also missed the revenue. So when you read through this transcript, they talk about the struggles they are experiencing and the fact that their products aren't really selling. But 2 things they can control is the reduction of cash consumption and also getting leaner and more efficient. So what's next for Beyond Meat and what are their plans moving forward? They just recently introduced the Beyond Burger 4 and 5. So huge innovations in these burgers. Supposedly they worked with leading medical and nutrition experts, unlocking health gains for these burgers with improved flavor, better aromas, better appearance, and the texture, while also driving improvements in nutrition and cost. So it looks like their fake meat is actually getting better, according to Beyond Meat. They've released their own steak line, sausages, meatballs, jerky. It does look like that is what they plan to do. So nothing too crazy with their plans, just new products, and basically they need to cut costs. So again, currently at a $519 million valuation now, going for around $8. The stock has moved up 30% in the past month. I'm not sure how much of that is related to the meme stock rally happening currently at this moment. If you want to take a look at the yearly data, sales growth year over year has been declining. Gross profit margins have dropped down to negative. They were hovering around 20 to 30% from 2017 to 2020. Now their net income was negative 333 million and they have a declining earnings per share year over year. Another red flag is they only have 157 million in cash with 1.1 billion in long-term debt. So a company making negative 333 million in net income. I don't know how they're going to pay off all this debt. They're probably paying a lot of interest on that debt. And pretty much the only plan they have is to release a new burger. Yeah, I don't know about this. Coming from a value investment mindset, I would currently avoid this stock until we start seeing some revenue growth, until we start seeing some improvements in their net income. But other than that, I would wait and see if the new Beyond Meat products are any good. Just a disclaimer, yes, you could have still made money the past week buying this because of the whole craze happening right now, but just to sum up my thoughts, if you're more analytical and you want to play a little bit safer with your money, I would definitely avoid this stock. Be careful out there with all the meme stocks going up and make sure you have a plan to get out when the music stops.